Hey investor friends, I'm Michelle Markey, and today I'm going to talk about a stock that's lit up the value investing world with questions as to whether it might be on sale right now. And the stock is none other than Alibaba. And this stock has been on a downtrend since a controversial speech by founder Jack Ma in late October 2020. So Alibaba had hit a high of $317 back in late October 2020. And now it's about $100 off that high, and it's hovering around $212 the last I checked. And this stock gained some news recently because in early April 2021, the 13F filing for Daily Journal Corporation came out, and the investment manager for DJCO is none other than legendary investor Charlie Munger. And it shows that he bought a stake in Alibaba worth about $37 million. And not too long after that, we saw Mohnish Pabrai, a big fan of Warren Buffett and Charlie Munger, also follow Charlie into buying a similarly sized Alibaba position at $38 million. So if both of these legendary investors are invested in Alibaba, I think that it's worth a careful look. And if you also like studying and emulating legendary investors like Warren Buffett, Charlie Munger, and Mohnish Pabrai, I'd love if you could please smash that like button and please subscribe because it greatly helps out my YouTube channel with the YouTube algorithm and it lets me know you're interested in what I'm talking about. I greatly appreciate it. Thanks. This should go without saying, but just in case, any good investor should conduct their own due diligence on any stocks or other types of securities they might buy or sell. And none of this is investment advice. This is just information that I've gathered and tried to study and calculate based on available information on the internet that anyone can find. And I'm not suggesting or recommending anyone buy or sell Alibaba. This is just for entertainment, information, and educational purposes only. So I hope you enjoy what I'm sharing today. If you don't want to have to go digging around the SEC Edgar search website and compiling data from XML files, you could visit websites like Dataroma and Whale Wisdom, and they conveniently have posted the current buys and sells or other portfolio activity from the latest filings, and they have it on a lot of super investors, including Charlie Munger, Mohnish Pabrai, and Greg Alexander, who all bought BABA in Q1 of 2021, and it happens to show the reported price of $226.73 because that was the price on the last day of Q1, which was March 31st, 2021. So that's why they all make it seem as if they all bought it at the same price, but not necessarily. These super investors could have bought BABA at any point during the first quarter, and it will just show that price as a point of reference. I attribute a lot of the way I invest, like Warren Buffett and Charlie Munger, to what I learned from Phil Town and Danielle Town, primarily from their podcast and book named Invested, as well as other materials like from their websites and many other sources that study and try to emulate how Buffett and Munger invest. And one thing I learned from Phil and Danielle was Charlie's simple investing principles in an interview he gave to the BBC, and it's posted in YouTube. And the 4 principles include that a business must, and I've also categorized these in terms of how Phil Town calls them the 4 M's, and they're as follows. A business must have meaning in that we're capable of understanding it and that it means something to us, like we actually care. And 2 would be moat, that a business has intrinsic characteristics that give it a durable competitive advantage. And 3, that it has management, ideally with integrity and talent. And 4, that it has a margin of safety, that we can buy it at a price that makes sense and that we're not overpaying for a wonderful business. So with these key principles in mind, I'll try to talk through some of the highlights of what I learned about Alibaba. I'd like to first touch on the principle of management. And the main things I know, because I've yet to do way more homework in this area, is that Jack Ma was a co-founder of Alibaba and many of its subsidiaries and affiliate groups. And Daniel Zhang has been the CEO of Alibaba since 2015 and its executive chairman since 2019 when Jack Ma stepped down from that role to pursue other things like philanthropy and other projects. And that's basically what I know about the management. I don't really know how good of a CEO Daniel Zhang is, so that's something to still look into, but Jack Ma must still have tremendous influence in whatever things Alibaba and its affiliates and subsidiaries are up to, because when the Ant Group, which he founded in 2014, was supposed to IPO near October 2020 at a valuation of $313 billion, he then gave a very controversial speech in which he criticized the Chinese financial regulatory system and said it was like an old people's club. And then by early November 2020, the Chinese government came out with new regulations that basically put a stop to the Ant Group IPOing. And then by February 2021, at the Daily Journal Corporation's annual meeting, Charlie Munger said that Jack Ma was very arrogant to be criticizing the Chinese government and their regulations and how dumb their policies supposedly were. And Charlie goes on to say that the Chinese government has been very shrewd in managing their economy and have done even better than the United States has done in managing our economy. So I found that very interesting about how Charlie Munger felt towards the former co-founder of Alibaba, and that in spite of that, he's still super bullish on the future of the Chinese economy and whatever the financial future looks like. So clearly, in spite of some of the turmoil going on, and I would consider that Alibaba is going through an event as a result of some of this fallout between Jack Ma and the Chinese government, that this might be why Charlie Munger and Mohnish Pabrai and others are buying into Alibaba, because they believe in the future of the Chinese economy. Next, I'll touch on some of the principles of meaning and moat. So, am I capable of understanding Alibaba? And this is a huge conglomerate of stuff. And the closest that I liken Alibaba to is as if I combined a mix of Amazon and Amazon Web Services and Google and YouTube and Apple and eBay. And there's way more that Alibaba might be like in America. So maybe I'm capable of understanding it because they have so many businesses that maybe I can find a corollary to, but there's still way more to dig into understanding about what are all the different businesses within this giant group, and in addition to that, what are its affiliates. And then in terms of understanding its durable competitive advantage, it's helpful to evaluate if its businesses in commerce and digital media and entertainment, innovation, consumer services, financial services, and cloud computing and infrastructure services, how much of all of those business components give it a durable competitive advantage. So these are all things to analyze, as well as looking at their current financial performance. So we want to see if, based on their current and historical performances, if this might be able to give us a clue as to whether they can maintain their moat into the future. As we're formulating our investment thesis about Alibaba, it's important to consider the pros and cons of this potential investment and to consider all of the good reasons and negative reasons to either buy or sell this stock. And like Charlie Munger says, invert, always invert, which means that we should not just focus on studying all the reasons why someone would want to buy this, but also all of the reasons not to buy this stock. And I wanted to understand why Charlie bought this stock on behalf of the Daily Journal Corporation. And he gave a statement to Barron's, and I want to say this to you word for word because it's super interesting what he said. And it goes like this: the Daily Journal Corporation has and needs securities held as cash equivalents. These cash equivalents would normally be U.S. Treasury bills, but with returns on Treasury bills now so low, the company instead invests in common stock. And unless its long-term prospects seem good, a common stock is not considered to be a good cash equivalent. So what this means to me is Charlie Munger looks at this as a way to get a better yield and return on cash than what it currently might be doing invested in basically bonds for the US government. So in investing in Alibaba, that's a big leap to make because according to a Markets Insider article, he was a little suspicious and skeptical about what's called variable interest entities, or VIE. And Alibaba is an American depository receipt within VIE. So that's something to kind of look into as to what is a VIE and what are the risks. Like, I know that a VIE is based out of the Cayman Islands, and it basically gives us sort of the rights to the profits of a company, but sort of indirectly. And Alibaba is able to be listed through this VIE structure in an American Depository Receipt, or ADR, on the New York Stock Exchange. So all of the ways in which this might be structured is something to definitely consider as to how much risk there could be in investing in this type of VIE. And I believe I heard on a podcast that Phil Town mentioned that VIE is technically considered illegal by the Chinese government, that actually only Chinese citizens can buy Chinese companies directly, and everybody else is not truly legally owning the underlying business behind the stock. So it seems that Charlie Munger was able to get over this potential risk that at any time VIEs could be disbanded, and maybe we as investors from the rest of the world may not be able to get our invested capital back. But for now, it seems that Charlie and Mohnish Pabrai are comfortable in investing in this ADR VIE. So as with any potential investments we might make, we should carefully consider any and all risks there might be with the investments and any downsides that could result in our permanent loss of capital, which is what I define as risk. And I like how the Motley Fool summarized some of this idea, in that maybe investing in Alibaba could be a good deal if you can handle the China risk. And we all know there are a lot of tensions between the US government and Chinese government, but nonetheless, Charlie Munger is a big bull on China, and he seems to believe in its economic prosperity, so that might be good enough for him. As I'm doing the research as part of my investing practice, I try to get a better grip on a company's meaning and moat by understanding different perspectives. So I read various articles, like this one from Seeking Alpha called "Where Will Alibaba's Stock Be in 5 Years?" And you can read this article and then understand what this author had to say. And then in addition, I like to read some of the comments that people leave in the article and see what they thought. And I particularly thought this one comment from, I'm probably going to mess up the name, but it's from Siwei Shui. And I liked how this person talked about how Alibaba's creating value and it makes people's lives more convenient. And I'll just cite a little bit from it because it's pretty long, and there were some salient points in that this person lives in China, and they say that they use Alipay like most people do when they need to make payments, and when they want to watch a movie, they go to Youku, which is kind of like their YouTube. When she's hungry, she makes an order on Elimi, and when she goes shopping, she goes to Darunfa and Hema, and when she buys something online, she goes to Taobao and Tianmao, and when she wants to do some investment, she goes to Ant. And in addition, if you want to have your own business and use SaaS services, you would use Ding Ding, that's supported by Ali Cloud. And as you can see, this person is super entrenched within the ecosystem that Alibaba has created. And I'm not necessarily making an investment decision based on what only one commenter on a Seeking Alpha article might say, but I find that to be very useful to better understand how much meaning this company has to hundreds of millions of people who might use it in China and other regions. Finally, with Charlie's principle of margin of safety, we want to see if these super investors bought Alibaba at a price that makes sense and which may have given them a margin of safety, which means they had a buffer or a discount to an amount they believe is its intrinsic value. So basically, the way I've learned what margin of safety means is that you're basically trying to aim for a 50% discount from what you believe the business is truly worth. So with that in mind, I like to visit sites like Guru Focus and look at the financial data to pull information about how this company has performed over the last several years or quarters, and also take some of this information to try to figure out margin of safety and other valuation prices for what might make sense to buy this company at. And on Guru Focus, I can see things like how their sales and earnings and free cash flow growth rates were anywhere from 20 to 50% plus over the last 5 to 10 years. So I feel like that's an interesting number to bear in mind, as well as I took things like their earnings per share in the trailing 12 months. So I used that also as part of my calculations. And for the grand finale of this video and what you've all been waiting for, I share a few valuation calculations for what some of the prices might be to buy Alibaba at either a margin of safety or payback time or owner earnings or 10 cap valuations might be. And these pricing methods came from what I learned in the Invested book and Payback Time book by Danielle Town and Phil Town. And I also gathered this information from the SEC's website in a 20F filing for Alibaba from March 31st, 2020. That's the latest I could find, as well as information from Guru Focus. So the following is what I came up with, and this is just a rough estimate. It doesn't mean that these are necessarily the best numbers to have used or guessed at, but it's the closest that I wanted to use in being a little bit conservative, and here they are. And with the current price being around 212 US dollars, I calculated a margin of safety price using a 20% windage growth rate. And if you want to understand what that means, definitely check that out in the Invested book. And I had an 8.1 earnings per share from the trailing 12 months from Guru Focus. And I assumed a windage price to earnings of 30. So the margin of safety price was $188.07. And then this means that if you double that, the future sticker price, or maybe its intrinsic value, might be $376.15. And then the payback time valuation at 10.5 years, where I get my money back, I used the 20% windage growth rate of the free cash flow, and this was 18,489 million US dollars, and that price came out to be $210.62. And then I got the owner earnings or 10 cap using the pre-tax income of 23,535 million, and I added back in amortization and depreciation and the accounts payable and accounts receivable and income tax, and I subtracted the capital expenditures of 4,597 million, and I got to an owner earnings or 10 cap price of $209.16. So with all of these prices for guesstimating how much a super investor maybe should have paid for this company, we're not too far off from what Charlie Munger, Mohnish Pabrai, and Greg Alexander ended up paying, maybe somewhere in the $220 range in Q1 of 2021. So I kind of feel like even though some of these people bought this company a few months ago, maybe, that we're still in an area where maybe this company could be on sale. And I think that I actually am okay with owning this company as part of what I think is part of a risky biz portfolio. And I got that from Phil Town, where you have holdings of somewhere less than 10%, where you're not fully sure and haven't maybe done all the homework, but you're willing to kind of risky bet on this company. So I'm okay with throwing a little bit of money towards this company in a very small percentage of my portfolio and seeing where it goes. And if Mohnish or Charlie ever sell out of this company, then I probably would hightail out of there too. In many ways, I don't mind doing what Mohnish Pabrai does and being a shameless cloner, like what he talked about in his very well-known book, The Dondo Investor. And he likes to shamelessly clone other people, but maybe he didn't necessarily copy Charlie at the time when he bought the stock, or maybe Charlie told Mohnish that he was buying the stock and then Mohnish was like, sure, I'll throw down too. But either way, I like how Mohnish encourages shameless cloning, where it's okay to copy other guru and famous investors who already probably did a lot of the hard work in trying to figure out if this is a good stock to buy. So I don't mind following Charlie and Mohnish into this investment a little bit, and I'm not risking all that much. So I'm okay with kind of just seeing where things might go and then having a plan in place in case I need to sell. And I'd love to hear from you what you've learned about Alibaba, what might be some other considerations I haven't talked about yet. I'd love to hear from you in the comments. And if you enjoyed this video or learned something, please like and subscribe. And I wish you well on your journey to becoming the best investor you can be. Till next time.